So, today we're going to be talking about what the downfall of most crypto investors is. So, this is actually pretty prevalent throughout the whole crypto community. Everybody who gets inside of crypto actually faces this at one point of their journey in crypto. Anyways, remember, I'm not a financial advisor. None of this is financial advice, but let's go straight over it. So, let's just kind of hop right onto this because look, downfall of most crypto investors, let's just be honest, it's that they always sell at the wrong time. They always sell when things go down. And this is the problem. This is actually a huge problem as well. Just looking over here at the Bitcoin prices, we're at 86K right now. So Bitcoin was doing extremely well, right? It was doing extremely well for a good amount of time. It went all the way up to 108K. Everything in crypto was doing well, and then prices start to drop. The second prices start to drop, some people are like, all right, it might come back up. So a lot of people don't sell around here, right? The institutional investors, they start to sell around here. All the big whales with all the money, they start to create the first drop. And then you start to see the liquidations inside of the futures market. You start to see a lot of different futures contracts start expiring around this time. And you just start to see a lot of people get liquidated. And then when that happens, the price goes down even more. And that's what all of this is. So then you now see the pricing of Bitcoin going down like what, 79K? So the price went down so much, and actually it went a little bit lower than 79K. It went all the way down to 78K. And this is a problem because people, they didn't want to sell up around here. The price goes down and it goes to 90K, and they're like, nah, it's going back up. It's definitely going back up. And then it goes down to 78K, and they're like, oh man. And then they sell around 78K because they think it's going to continue to go down. And then the price goes back up, right? Boom. The price goes up to 86K, and they're like, oh man, it's coming back. So what is happening now? At this point, right now, at 86K Bitcoin, people are now starting to buy back in. The people that sold down here around 78K, 79K, even 80K, they're like, oh man, I got to get back in before it goes up. So now they sold at a loss because they probably bought somewhere up around here because they're new to crypto. When I say the downfall of most crypto investors are the new ones. They're the people that are coming in. That's the most people inside of crypto because they're so new. They just keep getting recycled in and out because after they fail this rally, right? After they fail this bull cycle, they're probably going to quit buying crypto altogether. And then a whole new set of people comes in after that on the next cycle. So a lot of the people here have bought Bitcoin around 90K and 100K because they heard Bitcoin was going to go up to $1 million. They heard Bitcoin was going to go extremely high. So they started buying extremely high, and they had no idea that they were buying extremely high. So that is actually a serious problem inside of crypto that's been going on for a long, long time. And everybody faces this at some point. But it's up to you to learn after you get burned like this how to not get burned. And that's what I'm going to be talking about today, like how to not get burned. So instead of trying to sell here at the bottom, like because everything has dropped and you think that it's going to continue to go down, instead of selling around like 78K, the best thing to do is to buy around those levels. Those are the levels you want to buy more. Like, don't sell what you already have. Like, you already missed the opportunity to make an enormous amount of money. You missed that opportunity. You probably bought too high anyway. You already missed the opportunity to sell the little bit of gains that you did have. So now you're down, and Bitcoin is down to 86K. It was at 78K before. But the thing is, whenever you see it dropping all the way down here like that, you really want to go ahead and buy more in these levels. Like I said, none of this is financial advice, but these are the levels right here that me personally, this is where I like to buy. I like to buy in these areas. Now, what I'm seeing here with Bitcoin, maybe it looks to some people, it might look like it's about to take off, right? Now, we have this resistance here. Hypothetically speaking, if we get past this resistance, this is typically a bullish area for Bitcoin. The second it hit this area before, it started to take off. So if we can actually pass this resistance here at 86K and go up past that, we can get up to 90K. And then if we can get past 90K, we'll have little to no resistance all the way up to 98K. Then if we can get past 98K, little to no resistance up to like 105K, and then boom, 108K. But personally, I believe it's going to go a little bit lower. And this is also one of the things that a lot of people in crypto fail to realize. when things start going down like this and you start to see these recoveries are pretty much the people that just sold on you buying back in. So the people that just dumped on y'all, they dumped all the way up here. And now you're seeing those same people getting back in. These are the whales and the institutional investors. They're getting back in at cheaper prices because they know people are going to see them doing that. And they know that a lot of the people that see that are new and they're just going to start buying back again. So now what they're going to do is end up riding this wave up as you guys buy back in. And then once it gets to the level that they want to sell at, either here or there, they're going to boom, eventually go ahead and sell. And once they sell, this is going to take the prices down even lower to the next Fibonacci support at 74K. Now they know they already got some people hooked on this, right? They already seen people sold down here at 78K. They sold at 80K, 78K. They seen the price go back up to 86K, possibly might even go up to 90K, but they seen it go back up. And then those people start buying back in. And they're like, all right, we got enough people that bought back in. And then they sell again. And this drives the price down even further. And what do you think happens again once Bitcoin reaches 74K and then eventually down here to 68K? Because 68K is actually significant support. So what happens when Bitcoin hits 68K now? If Bitcoin hits 68K, I'm not going to say when, but if Bitcoin hits 68K, well, guess what? The people that just bought back in at 86K and 90K are like, oh my God, I just made a mistake, because they tried to sell at 78K and then they noticed, oh man, it's back up at 86. I might as well buy again. I'll make some of that money back that I lost. And then just to know, or just to see that it goes all the way back down and then it hits a $68,000 support, and then boom, now they're down a lot more, like way more than before. And now they're like, oh my God, now they got to sell. So boom, they go ahead and sell at 68K Bitcoin. Boom, the institutional investors buy all those Bitcoin from them, or all the cryptos, whatever you're trading. But the institutional investors go ahead and buy that from them, and then they send the price up. And the people are like, oh my God, it's going past 74, it's 75, 76, 78K now. And then they're like, all right, let's go ahead and buy in at 78K. Even though we just missed all these opportunities, we just lost a lot of money trying to trade against the market. And then they're like, okay, now we're just going to go ahead and buy again at 78K. Even though we just sold at 68K, we're going to go ahead and buy at 78K. Even though they bought up here in the first place at 100K, and then they ended up selling at 78K because they were too late, and then they bought again at 86K, and now they're selling again at 68K, and now they're buying again at 79K, 78K. Then they're like, okay, it's going back up. And then it tries to go back up, but it gets rejected because the major support will then be right here, 78K, which will then become major resistance in this area here. So then now they're like, okay, we're buying up here. Boom. The price goes down, 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 down 58K. And now guess what? Now you already bought at 78K after you sold previously at 68K. So now you're like literally down like 200, 300%. Oh, I don't even know how you can be down that much, but it happens. It actually happens. But let's say you're down 95% at this point. Now it's down to 58K. Now you're like, all right, I originally put in 10K. Now I only have 1K. So I'm going to go ahead and try to secure my 1K. I'm going to sell here at 58K. I'm going to secure my 1K. Boom, you sell here. But now you just messed up because now you sold at the very bottom. And now the market is about to continue doing what it does because the market goes in cycles. So now it's going to start taking off. It's starting to start taking off. It's all the way up to 78K now. Boom. But now you're like, wait, after everything that just happens, it's probably going to happen again. Why would I buy at 78K when I just kept doing the same thing and I kept losing more money? I'm not going to buy. It's going to go down. So I'm just going to wait. But then what happens? Then the market keeps climbing. The market keeps climbing. It keeps climbing. And it goes all the way up to 120K. And you're like, wow, I missed that whole run. So you know what I'm going to do? I'm just going to take this $1,000 and I'm just going to put it right here. I'm just going to take this 1K and put it in because, I missed the whole run again and I just messed up. And then what happens from there? Well, then what happens from there, it gets to 120K It passed 108K. Now it's at 120K. So now that pullback, that first pullback has to happen. Boom. First pullback happens, brings the price all the way back to 100K Bitcoin, possibly 90K. Now you're like, wow, I'm just done. Now you're like, I'm just done. Now you have like $500 left and you're just completely done. So now you just end up selling here. So now the run is going to continue because this is the actual cycle. This is how the cycles work. So then, boom, the run just continues and continues, just keeps going up, 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 up. You lost $10,000, only have $500 to show for it. Now Bitcoin is at $200,000, right? Now it reached the Fibonacci all the way up here, the resistance. Now you're like, okay, I just got paid. I saved up a lot of money throughout that. Even though I lost all that money, I have $500 of the $10,000 that I originally had. Let me go ahead and take this next 10,000 that I just now made. Let me just put it in at 200K so it can go up more. And then boom, goes all the way back down, 120K, right? So now you go from the $10,500 that you just made $10,000 from your job, and you have 500 because that's just how much you have left from the other 10,000 you put in. So now you put in another 10,000 plus the 500. So now you're all the way down to, you guessed it, you're down to like $5,000 now because it went all the way down. Then you sell again, and then it just starts doing what it does, right? So you get the drift. This is pretty much how it happens all the time with new investors. It always happens like this with people in the crypto market. This is how most crypto investors fail. This is so many people's story. And at one point, it was my story as well. This is everybody's story who gets in on crypto. That first cycle, you get completely wrecked. Like, you get lucky a few times to the point where you just get too cocky and you just get wrecked. And then you just try to trade against the market and you continue to get wrecked more. That is why dollar cost averaging is the way to go. When you see it come down to these prices, dollar cost averaging is the way to go. You don't want to sell here because then when the prices go up, you're going to be like, oh, I don't want to miss the market. I don't want to miss the whole bull run. So I'm just going to buy more just to see it go down even further. You don't want to do that. What you would rather want to do is a dollar cost average in here. So then it brings your average cost from 100K down to somewhere like 86K or something like that. So now you only have to get up to 86K from 78K to break even. And then when it gets back to 100K, that's all profit, right? And it's not going to immediately do that. It's probably going to end up going down even more. And that's why you continue to dollar cost average. You buy again here, and now it takes your average from 88K down to about 78K, right? And then the price goes down to 58K. Now it takes your average from about 78K to about 68K. So now, once it gets up here to 68K, you're breaking even. But then once it gets back up to 100K, you're making a lot of profit, getting back to where you were once before. You bought here originally, but now when you get back there, you're making a lot more inside of profit just because you dollar cost averaged. And then once it finally gets up to 200K, you're making even more profit, way more profit. And that's such a better option than trying to trade against the market. You don't want to trade against the market cycles. So this is just something that happens to every person inside of crypto that gets started. So this is just a little food for thought for y'all, so you can make your own decision. Because like I said, I'm not a financial advisor. None of this is financial advice. Definitely make your own decision. But yeah, this is usually how it goes with a lot of people in the market. But yeah, this is all I got for y'all today. Definitely hit the like button and subscribe. Remember, I'm not a financial advisor. None of this is financial advice. I know I said that like 10 times. Anyways, leave a comment in the comment section. Let me know what you guys think about this. As always, I'll be back with another video.